So the market did take another dip yesterday. It went from 50,000 to 50,500, and it went all the way back down to 46,000. And every time it does this, it feels like we're getting closer and closer and closer to capitulation. It feels like more people are capitulating. It feels like the sentiment is turning, and we're getting closer and closer and closer to the proverbial bottom. So in these times, it's the whales that have a certain strategy that they follow. And today we're going to look at what the strategy of the whales is, what do they do in these times, and whether they are buying. And then we're going to actually set a date for when we think that this bull market or the bull cycle is going to continue. So it's going to be one of the biggest shows we've ever done. Sorry we're late. We have been preparing the show for you guys. This one is going to be super important.
It's all about the DJ, baby. Crypto man. It's all about the DJ, baby. Uncle Ren's in charge. He's a crypto star. So savvy what he say. Fast money like a sports car. He's all about the DJ life. Make some money, change your wife. Big calls on the old coins for the bull market hype. He's all about the DJ, baby. Crypto man. 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 Crypto man ran. Crypto banter. You got crypto questions, they got crypto answers. Jean-Claude Van Damme of the Banter fam. Could he kick it? Yes he can. Can he kick it? Yes he can. Crypto man ran. He's all about the DJ, baby. Crypto man ran. He's all about the DJ, baby. Crypto man.
Yo, welcome back, guys. I'm Crypto Man Ran. I'm here twice, sometimes three times every single day in the bull market and in the bear cycle within the bull market. And I'm here bringing you crypto love and guiding you through this market. Yeah. If you're new to our channel, welcome. You've joined us at quite a strange time. I mean, it's getting bloody out there. And we actually want that. We actually want it to get bloody out there. We're going to talk about that today. So if you're on here, subscribe to the channel, subscribe to the fastest growing crypto community in the entire world. I mean, hard to believe that a year ago, we started this business. In a year, we've got over 500,000 subscribers. We've grown to be the biggest live crypto show in the world. And we keep growing. In fact, I don't know if you guys have been on our website, but if you haven't been on our website, don't go and break it now because it still is in beta. But you can see that every single day we are dropping new wisdoms on our website, and we're trying to build this like Twitter type social network. So you'll see that as you log in here in the next couple of days, that we've got this Twitter type social network where we're breaking a whole lot of news, and soon you're going to be able to use your Twitter profiles and actually use our website as if you're using Twitter. It's going to be absolutely amazing. Give us another week or two. But for now, we are dropping articles and research guides every single day before the show. A whole lot of articles and research guides are being dropped there. So make sure that you're there, because otherwise you truly are missing out. Remember, it's not the final site. It's just another step forward in us building a community platform for you guys to interact with us in the bull market and in the bear market. And again, just to think about it, we've been here for a year. In a year, we've built this community of people just like you. We've built the stickiest, the most loyal community in the entire world. So if you are now joining our community, welcome. We'll guide you through this. We'll guide you into the bull market, and we'll make sure that you guys make life-changing money in the next cycle or in this cycle, depending on what your belief is and what your thesis is. And I think today we need to look at the thesis. We need to look at where we are in the market, because it does feel like with every little Bitcoin red candle that we have, and we had one yesterday, we're getting closer and closer and closer to capitulation. And we want capitulation, because that's how markets work. Markets don't keep running or don't start running when there's still healthy sentiment in the market. What happens after these corrections is the market usually takes a while to come down. In fact, let me show you this data over here, which I did show in the earlier show. But if you look at let me zoom in for you guys so you can see it a bit bigger, and let me go back a couple of months and show you what happened in May. Let's go back to May. So what you can see is that, this is where we capitulated in May. This is the leverage capitulation. And look how long it took for the market to start recovering. So you had this whole accumulation phase of the market starting to recover. And what happened, if you remember, in May, was we started getting all the salty people. I don't know if you remember, but we had the salty people. Do you remember that meme? Have you got that meme? So we had all the salty people that came in, and we kept salting them out. In fact, let me try and find it for you guys. There we go. Remember that? Remember the alert? Is there one with like the sirens? I remember there was one with sirens. We don't know the one of the sirens anymore. We should get it back because, you know, the salty people are starting to come back. And when the salty people start to come back, then we know that we are nearing the bottom of the cycle. And you want to be entering in the bottom of the cycle. You don't want to be entering the cycle when people are still bullish and when people are still cowboys, because then you are buying with the sentiment. You want to be buying against the sentiment. You want to be buying when the whales are buying, because whales are smart. Whales accumulate into bad sentiment. And right now, what we're seeing for the first time, every single time that we get another one of these candles, every single time that we get another one of these red candles, we get a change in sentiment, and more people become less and less and less bullish. And you can kind of see it in the tweets. You're getting these short everything, SPY, BTC. You're starting to get those kind of tweets, which we haven't seen for a long time. We're starting to get the salty comments to Sheldino's tweets. Now, I don't know what to say, but Sheldino is the best guy with the best heart. And if you have been following his calls, he's always said, let's have stop losses. Make sure you have stop losses. He's so responsible. And then we're getting the salties are saying, are you trying to annoy people with your optimism? A dump is a dump. Why would we need it to label it healthy or positive? Let's be real, nothing positive about it. And we all hope that this will pass. Let's just put some salt on this guy, and then we can salt him out. Salt him out, let's go. Goodbye. Salty, goodbye. And then we're seeing more. There's more of these salty comments. And remember, when we see salty comments, we like this because it shows us that we are being patient. We are the ones that are being patient. So this guy says, his name is at Screen Time, says, the best time to be bearish was yesterday. The best time to quit crypto and learn agriculture full time is today. I don't know if he's being sarcastic, but you see, another negative comment to Sheldon. So this is suicide mission. Mostly those altcoins crashing so hard. I'm even more confused whether to sell at lost or lose more money or go on a spelling course in English. So this is what's going on. Another salty. So what you can see is that the sentiment is starting to turn and people are starting to get salty. And we know that in May, people got salty, and it was only when the buyers were exhausted that the market turns. In fact, the market doesn't turn when the sellers get exhausted. The market turns when the buyers get exhausted. I'll show you this again in May. Think about what happened over here. You had the capitulation of the leverage over here. You had the capitulation of the price. And then what you can see is that the price continued to drop for a while. So if you think about where it stabilized over here, it was around 38,000, but it continued to drop until about 30,000, another 30% before the buyers capitulated. So all throughout this little period over here, we had this buying momentum, and it was only when the buyers finally capitulated that we could get the show back on the road. We could get the price going back up, and that in turn led to the leverage going back up, and then in turn that led to the price going up. But for now, we are in this capitulation phase. See, there's another one, Mr. Well. Mr. Well's always bearish, though, always bearish. I mean, this guy is so salty. I mean, yeah, he's so salty, so salty. I don't know if you guys saw this, but last night, a good friend of the show and someone who we support, who we've had on the show many times and really a friend of the channel, made a video last night. Now, Tyler he does suffer with depression. We know this. And he published this video last night. Let me play it for you.
I've been battling depression, and it doesn't have much to do with, the market. Actually, it has everything to do with the markets. It's hard for me even to put this into words, you guys, but creating content daily and doing the research is a lot on my mind, a lot on my brain, and it's getting the best of me. I've been trying to do it for the past 4 years every day, and
some money, change your wife. Big calls on the altcoins for the bull market hype. It's all about the Degen, baby. Crypto man. It's all about.
Sorry, I don't know if you guys lost me there. The studio is giving us technical problems. We've got to burn down this bloody studio. This is ridiculous. It happens every single day. Anyway, I don't know. How much of that did you guys hear? Did you hear Chico?
Yeah.
Let's just go back here and just quickly listen to it. I think it's important.
Actually, it has everything to do with the markets. It's hard for me even to put this into words, you guys, but creating content daily and doing the research is a lot on my mind, a lot on my brain, and it's getting the best of me. I've been trying to do it for the past 4 years every day, and I'm sure you guys have noticed, there's times where I just break down and I can't produce content. I'm at one of those points right now. I'm just completely, utterly sick of making content and trying to keep up with these markets. I'm tired. I'm exhausted.
Again, another sign of, I don't want to say he capitulated to the market because I think he's more experienced than that. But he says here, Trading Lord says, my guy breaking down during a video makes me reconsider doing any kind of social media content. Most people are toxic as fuck behind the scenes and don't care about the consequences of their negative comments. Your mental state has to be bulletproof to expose yourself daily. And I think it's true. It is exactly like that. Your mental state, if you want to do what we're doing, if you want to be an influencer in the market, you got to be able to brush the salt off the people. You just got to be able to brush the salt off yourself, get rid of the salty people. In the bull run, you'll find that those are your biggest fans, and in the bear market, well, they're your biggest enemies, and they blame you for all their losses, and that's the reality of it. But the reality of it is that it's putting, people are capitulating. People are capitulating all around us every single day. And that is, as I said, it's a good thing, because the more people capitulate, the more the buyers get exhausted. And until eventually the buyers will get so exhausted that we will get to a point like we got into May and like we got into after the 2017 bull market, and we can get the show back on the road. But that typically isn't going to happen until we exhaust the buyers. And Crypto Dog says it actually pretty well. Carl Davies says, it's not going to happen until the plebs ran out of coins to sell. So we've got to get the plebs to run out of coins to sell. We've got to get the plebs to capitulate. And when the plebs capitulate and they run out of coins to sell, that is when the market's got to turn. And so for you, this becomes a game of survivor. It's a game that tests your conviction in the market. Now, if you have conviction, then you are like the whales. If you come here just for the money, and if you come here at the end of the cycle, and if you come here and you don't understand the technology, and if you come into this game and you don't have a thesis, then in time you will capitulate. And now it becomes this patience game. It becomes this game of how long can you hodl while everybody else capitulates around you so we can get back to business as usual. And if you believe in your thesis, if you have conviction in your thesis, if you've done the research and you have conviction in your thesis, then it just becomes a waiting game. And the truth is that in the waiting game, you've got to have a strategy. And we'll talk about that strategy in a couple of seconds. But Crypto Dog says, I absolutely 100% could be wrong, but this feels like we're in the shakeout zone, Bitcoin, ETH, and a few others, which is exactly what I said. It does feel like we're starting to be shaken out. Sure, it might dip a little lower. It might not pump as dramatically from here soon. But in a couple of months, you will have wished you never chopped yourself up from here. And that's exactly what I'm trying to say to you guys. It is about not chopping yourself up here and getting swept away in the pleb mentality, because if you get swept up in the pleb mentality, then you're not acting like a whale. Whales have conviction in the technology and where this is going, and they see this as an opportunity to increase their holdings and make more money. Now, I'll show you a few tweets from some people who are definitely thinking like whales. So Scott Melker is thinking like a whale. He says, I have no idea what the prices of any given coin will be in the future, but it's quite clear that blockchain technology is actually eating the world. That is someone who's basically just going to sit on his good quality holdings. And because he's done the research and he knows what he's holding, He's saying, look, I don't really care which coin it'll be. I've got my bag of coins. I've got a thesis. And you can see that he's now talking about similar theses to the one that we're talking about. Is it theses or theses? Theses. So he says the next 2 waves of crypto innovation will most likely be ZK rollups, snarks, and decentralized media. So we've said this, he's got a thesis, and if he's holding anything around this thesis, he doesn't really care about where we are in the market right now, because what he's saying is, hey, I don't really care. I know that blockchain technology is about to eat the world. And you know this because NYDIG raises $1 billion to fast-track development of Bitcoin products for institutions. Okay? That's the thesis. The thesis is that blockchain is taking over the world, and NYDIG just raised $1 billion, which is not a small amount of money. Why? Because they don't really care about the ups and the downs. They have a thesis, and what the whales do is they trade in this thesis. And the game is a game between the whales, who have this strong conviction, and the plebs who drop out and capitulate with these little leverage with these little leverage dubs. You can see it. So let's look over here. In the market, so Will Clemente says, he says, from an on-chain perspective, here's the key difference between now and May. In May, previously strong hands became weak hands. And you can see that. You can see the blue line here is the illiquid supply ratio. And that shows how the illiquid supply dropped. And then while the market was dropping over here, the whales were increasing their holding until the market actually went up. While the price was going up, the whales were increasing their holdings. Now, what the whales are doing now is that they are still accumulating. So that means that they believe that there is still a bull run ahead of us because they believe in their thesis and they have conviction in their thesis. And you can see that when you look at the liquid supply versus the illiquid supply of Bitcoin. The illiquid supply of Bitcoin is people that take Bitcoin off the market and they hold it in cold storage wallets and illiquid supply. Okay, it is going up even right now as we speak. Illiquid supply going higher and higher, almost in a straight line. Last 2 times this created a hard bounce in the price because the whales are holding onto their coins, while the blue line, or while the other line is the retail investors just capitulating and capitulating and capitulating. And what the whales will often do is they will use whatever tools they have to get the retail investors to capitulate. And one of the big tools that they use is the media. And you can see that here. Sky News says that UK Deputy Minister Rob misspoke when he said 250 people were in hospital with Omicron virus. Sky says the true number is 10. This whole thing of Omicron virus is 1 person has died in the United States, in the UK, and 10 people have been hospitalized. More people have been hospitalized for, I don't know, for what? For coconuts falling on their head than for Omicron. We said yesterday, Alec Baldwin's killed more people than the Omicron virus in the UK. That's what the numbers are. Zhu Su, who's one of the best investors out there today, says people who liked this price action, DCAers, true believers. People who disliked this price action, people who went to Degen long into December blow off top, anti-institutional investors. Because if you have a thesis, then you will be like Zhu Su. And he says coins transfer from the weak and pathetic to the strong and resolute. And he's putting his money where his mouth is, because while this capitulation is all happening, according to Etherscan, 3 Arrows Capital, which is the VC that he's with, took a total of 15,000 ETH, give or take 14,833 ETH from Binance and Coinbase to its cold wallet. So he has a thesis. He believes in Ethereum as a scaling layer. We know that. And what he's doing is he's buying. And what is he actually doing with those coins? Well, he's putting them in the ETH 2.0 staking contract so that his coins are actually going to start making money for him. So that is exactly what it's about. It's starting to feel like people are starting to capitulate. And as more and more and more people start to capitulate, it means that we're getting nearer and nearer and nearer to the bottom. But we're not at the bottom yet, or we may be at the bottom. It comes down to your thesis, and it comes down to combining your thesis with a strategy. And it's not only one strategy that you need, because you need to have multiple strategies here. You need to have a buying strategy, which is obvious. So what am I going to buy when am I going to buy it? What does my portfolio look like today? What do I need to buy? What are the price points at which I'm going to buy it? And I've said to you guys before, one of the things that I'm looking to buy is Trader Joe or an Avalanche portfolio. Why? Because the rest of my portfolio looks good, but the Avalanche part of my portfolio doesn't look that good. And so you need to look and you need to have a buying strategy. Another thing that you need is you need to have a switching strategy. So I have a switching strategy. My switching strategy says I'm going to switch some of this token into some of that token. I'm going to switch some of that ecosystem to some of that ecosystem. And with a switching strategy, I'm not as sensitive to net price. I'm sensitive to comparative price. So I'm sensitive to the price of the one relative to the price of the other, the price of Solana relative to the price of Avalanche. So if they both go down 10%, it's still a good time to switch. So you need to have a buying strategy. You need to have a switching strategy. Then you need to have two types of earning strategies, right? The first earning strategy you need to have is, what am I going to do with the cash that I've got sitting on the sidelines until such time as I'm going to deploy that cash? In crypto, you can make huge returns on your cash. You can make 20% return on Anchor. You can make a whole lot of other strategies. And in fact, maybe later this week, we'll do a show on what you should be doing with your cash until it's time to deploy. Until then, you need to have a strategy of what you're going to do with the cash, because the last thing that you want is cash sitting on the sidelines in crypto where you can earn so much money in cash and not have a strategy. So you got to have a third strategy. So the first one is a buying strategy. The second part of the strategy is a switching strategy. Which tokens are you switching into which tokens? The third part of your strategy is you've got to have a cash earning strategy, because the last thing you want is cash sitting in an account not doing anything. And the fourth part of your strategy says, if we're going to go into a bear cycle and you're not going to be focusing as much on buying tokens or trading tokens, then you should be spending time on making sure that the tokens that you have earn the most tokens or money for you while they are sitting. So like if you've got Ethereum, you got to decide where you're going to put that Ethereum. And there's many options where you could earn 10%, 20%, 30% a year on Ethereum, depending how much risk you want to take. If you've got Phantom, you can earn thousands of percent. Rodogo is right. Rogogo Dogo says it's only 2,500 lakhs because it's a bear market and people are salty. See, the salties are back. In the bull market, 10,000 lakhs immediately. Maybe we should do giveaways at 6,000 lakhs. Should we do giveaways at 6,000 lakhs? Giveaways at 6,000 lakhs. That's what we'll do. So you got to have a strategy. As we get nearer and nearer and nearer to the bottom, you've got to have a strategy and you've got to execute on that strategy. And we're going to talk about that strategy today. But that strategy starts off with a thesis, because you cannot have a strategy if you don't have a thesis about where the market is starting to go. And it feels like the majority of people are saying, Raoul Paul is saying that he believes that, let me find this for you guys. So Raoul Paul says that he believes that the bull market will start again in January. We'll go through that in a couple of seconds. Will Clemente says the same thing. He says, for what it's worth, my base case is that we will consolidate until end of year, carve out a new regime of mixed and negative funding, rates, bullish before Q1. So there's another thesis. So you've got to have a market outlook thesis. Based on that, you've got to have a strategy. And so given the fact that we need to get a market outlook thesis, I thought what I'd do is I'd get Birb on the show. Because remember, Birb was super, super, super bullish. I think he made a couple of predictions, and we wrote those predictions down on Twitter. And now I'm going to get him back, and we'll see how he sees the rest of the market cycle. Yo,
hey, what's up?
Man. What's up?
What's up?
Where are you? Look so good.
I'm actually, just trying to get some ease and rest, perhaps. Although still kind of like, seeing my office hours per se. So this is up in the mountains in Poland. It's a beautiful place to relax.
It's a great time. It's a great time to take a bit of a break, because
it is.
You're not missing much.
I mean, I'm not missing anything, to be honest. I see. I'm constantly up to date with what the market is doing. I see what the people are doing. I see what people are doing to Chico, although I don't know necessarily his case in depth. But the saltiness, the amount of hate that's been flowing throughout the Twitter wires, like in the past weeks, is just at times, for some people, I'm not really surprised it's not worth a hassle for them. Like you produce yourselves, you get them free content, and then they call you out and give you death wishes in returns, right? So it's not for long that many people can actually just realize that it's simply not worth the hassle, perhaps, for them.
It's nothing new. I mean, we know this from the bull market, bear market cycle of May, where everyone was everyone's best friend, and I even look on Twitter. Everyone is salty on Twitter. You said this, you said that. Birb, you told us the cycle is going to do this, because people are lazy. They don't listen to they don't do any of their own research. They don't take responsibility for their action. Anyway, let's forget about the salty people, because we're not going to dedicate more time. But your point is noted. Let's look at where do you see the market cycle now? Because you made a couple of bold predictions. I don't know if you've got those predictions in front of you. Do you have that tweet by any chance?
Let me check it very quick. I'll find it. Yeah.
Guys, while you are waiting for Birb, smash that like, subscribe to the channel if not subscribed. I did explain to you guys that the people that are here now are the ones that are going to make it, because the people that come in for the blow of top, which is what Zhu Su says. He says people who like this price action, DCA as true believers. People who dislike this price action, people who want to degen long into December blow of top. Coins transferred from weak and pathetic to strong and resolute. This is as healthy as it is needed. He is so right. I mean, this has got to be the best tweet out there today. And again, if you're here and if you're buying with the strategy, then you are the good people here.
True. I got it printed. Yeah. So we were sitting, right? The initial plan, although the dates are not necessarily mentioned in here, my initial assumption was to repeat what the past cycles, had for its seasonality, and basically usually Q4 ends up with something of a blow off top or reversal for the markets. This is most of the time that it happens for Bitcoin. It didn't happen this time, and the only thing that's changed over my perspective, over my overview, for what was supposed to come. Of course, this was a check. A lot of institutionals were already pretty much just FOMO'd in, like Nike's, all the metaverse, like it's just going crazy. You had the tech giants opening crypto payments, although it's still a process. It didn't even just finalize per se, like the 0.203. So we are somewhere over here. We are nowhere near the top yet. The technical analysis on chain, just like you were saying about the liquid supply, the strong hands that do not really want to sell to anybody, they keep accumulating. This is far from what constitutes a peak on the market. On chain, per the NUPL, net unrealized profit and loss, is far from the historical high values when the market peaks, right? You usually have 0.75 as the main threshold, and it goes over that historically 0.86, which is 86%. That is a net unrealized profit. So 86% out of the market is basically some sort of like, unrealized money versus the realized money. This is what creates a liquidity pool for the whales to exit. This is exactly what we are not having. So all those whales that are accumulating right now, they don't really have enough liquidity to exit, because when the real peak day comes, it's not going to be retail's, FOMO selling per se, or FUD selling. This is going to be whales FOMO selling. This is going to be cascades of dumps that, in my opinion, may lead us to like somewhere with reversal day of $40,000-$50,000 drop in a single day. We're nowhere near there yet.
So you're saying we're nowhere. This is a short-term correction. You still bullish that we're going to get to the 150,000 to 200,000 peak.
Well, yeah. So basically, the only thing that's changed, just like I said, the only thing that's changed. This is my report I posted yesterday. Everybody can get it on my blog, which is thebirbsnest.com. Go to thebirbsnest.com, and there is a blog section up in a channel, up in a bookmark, and it's basically here. It's free. And what I wrote in there is that the only thing that's changed is this time horizon, right? The only thing that is invalidated out of all of these theses is basically the assumption that peak would come, which is my conservative kind of like assumption, that peak will come in November, December, and that's it. Like the peak is not there yet. The market is not peaked. It's just seeing this local, I should say disruption, this local price shocks everywhere, and this is provided by by a lot of FUD across the global markets. This is not just a Bitcoin's thing, right? We of course had the Evergrande marking the exactly pinpoint to the single peep top on the market, right? This correction, this Dartmoor candle, which literally swept the highs and then swept the lows, was the perfect peak day with the Evergrande news, bringing back after the Maze sessions. And this kicked off this local correction, right? Which later become so we had an exogenous kind of like a disruption in FUD that developed and evolved into something more technical, right? Then we were seeing some local things, and of course this local liquidity kind of like hole, appeared. That this market, like in a single hour, crashed for like 20% and rallied back almost immediately all that it lost. So you had very thin books, you had very thin order books, right? So this was more of a like highly leveraged, longs flushed out. Some of my low leverage longs 2-3x, which is something very rare that you see this volatility got flashed. I think it got liquidated. But guess what? I don't really put much money in the futures. What I put is 0.2%, maybe, that if leverage just turns out into decent six figures. But when I lose, I don't lose much on there. So I'm kind of like, not really bothered by that. The Bollinger Bands, which cover for 95% of the price action for the, to stay between the bands, tell you that the next, the Bitcoin is most highly predicted, to be trading between the lower band, which is $44,000 and $60,000 upwards on the upper Bollinger Band. So whatever happens in here, it's supposed to be irregular volatility. We also know that after usual shocks like this, like this, what we had in May, or like even the March from COVID, usually have this kind of like a PTSD range. So usually have, again, local sideways, which kind of like makes people disbelieve the longer it gets that the breakout is imminent. So then it kind of like people liquidate and hedge themselves in a way with getting the stops beneath this. So the more stops, the more explosive move when it actually just breaks down. All right, then the entire liquidity kind of like just climbs up in here and builds the base, and once the base is broken, it kind of like results in this massive price shock, right? And this local price shock, just like it was in here or like it was in here, it takes some time to rebuild. It's not like immediate pullback and continuation of the prior direction, but it just takes time. But these price shocks, like this COVID crash or this from May, those price shocks, they do not disturb the long-term direction. That is what is the most relevant thing, right? They do not disturb the long-term direction. If you let me just play this. This is the candle, right? Does this candle really disturb the more than 3 year long bull run? Not really, right? This is just like this tiny thing that is definitely not disturbing long-term trends and directions if you smooth out with the moving averages. This is just a local disruption that may take up to a couple of weeks to unfold and come back to the levels before the crash, because most of the crashes like that, they recover, right? And unless the world collapses, unless we all die tomorrow and we don't wake up, and there is some asteroid crashing into Earth that will disrupt us all and make us go extinct, just like dinosaurs had. So unless something like that happens, the market is supposed to resume its prior trend after local, thing of sideways, chaos, consolidation, choppy, range, whatever you name that. But it's just a play game for the patient, And the only thing that about the entire scenarios that we discussed around with you over dinner in Dubai is just time. It's just extended it by a couple of weeks, and that's it. I mean, there's not much changed about it.
Birb, we're just having a technical issue with the camera. Do you mind just for a couple of minutes just sharing your thoughts on things going into 2022 and Q1? Yeah,
sure. Let's see. So for everybody also to see, we have something that is very much worth pointing out is this was a chart posted by TradingView, which tells you about the left upper corner put volume on equities, right? So put options are bought specifically to hedge against the crashes of US equity market. usually, right? Because if the equities crash and you have the put options, you can realize them and actually just, they give you the right to, right? But not an obligation per what the option stands for. And let you execute it, buy, sell at higher prices. This is the put option, right? The put option gives you the right, not an obligation though, to sell at higher options at higher prices, right after the, the prices crashed, for example, of equities, which causes and gives you an immediate reward. But most usually the way it works is that the more put options aggregate and accumulate, on the equities, the more uncertainty and fear it shows. So TradingView has shown us, that there's been in the circle red area, this is a put volume record, just like TradingView says, traded in a single day. So this is a spike in fear in equities. So we're talking about the overall narrative, which is which applies to global markets, right? That provides a lot of instability. Of course, you had Evergrande news. You had Omicron virus, that also like disturbed Bitcoin momentarily. So it's not really like this does not change per se anything other than time. And the technical analysis, just like any other form of analysis, it doesn't tell you time. It's not going to tell you where Bitcoin or other, S&P 500 index or whatever you mention name, when and where it's going to be to the single pip, in 5 hours, 5 days, or 5 years from now, right? What it tells you is that tells you about trends, about certain tendencies, and it's a fact. It's an inborn fact in the markets, imprinted that causes the market, to move. That there is an existence of bull and bear runs, bull markets and the bear markets, and basically you have to pick your side very carefully. Right now, as I said, there's nothing disturbing this local, about this local downtrend, local short-term downtrend. By the way, short-term downtrends have only short-term implications. Long-term movements have long-term implications. This local candle, as I said, this is nothing different than this or than this. And COVID crash didn't stop Bitcoin from the bull market. This mic crash didn't stop Bitcoin, off of the bull market. And this local hourly 20% drop is not going to stop Bitcoin from the bull market, because it's narrative that's continuing its long-term strength upwards primary trend, which is the bull market. So
exactly.
This is a short-term disruption. Nothing really special to me. I'm chilling. I'm doing very good.
Okay. So before I let you go, because I know you have to go. You told us you got a meeting.
Yes.
One question.
Yeah.
When does the upcycle start again?
Well, so to me, it's just a matter of days. Perhaps
Okay.
I took the screen off. I took the screen off, perhaps just too quick, very fast. But if you can play it, then there is a fear and greed index, right?
Yes,
And
exactly.
The fear and greed index just tells you, just like I was mentioning about the put options, spike, put and call ratio, puts to calls ratio, or VIX, VIX, whatever you name that. This is all showing you pretty much the same story, that right now on the markets you are seeing, this lower band and extreme area of fear. And usually crowds get it wrong, right? Because of perception biases, because of behavioral psychology.
Crowds get it wrong. Crowds get it wrong, but whales get it right.
Exactly.
Because whales aren't crowds. And if you look at, we'll look at, I know you got to go, so we'll let you go, just finish the point, and then we'll let you go, and then we'll carry on exactly on that narrative.
Yeah. So what I'm saying is, for everybody, the crowds are usually right in the middle of trend, but they are usually wrong at the extremes, right? And this is an extreme case, and the more extreme case it is, the more wrong they are. And they extremely much fear, and it's shown across the markets. And in my opinion, they are wrong.
Exactly. Birb, thanks, buddy. I know we're running late. Sorry, we had some camera issues. We'll let you go, guys. If you don't follow Birb on Twitter, he is the best Twitter account in the world. BitBoy is number 2. Birb is number 1. Birb's also got an amazing YouTube channel. The link is in the description below. Smash into his channel. I'm going to burn this fucking studio. You're right. Whoever said that, you're right. Brother, man, nice to see you. Get some time off. Take some time, and we're looking forward to getting you in South Africa just as soon as they allow travel back into this country, because
I know.
Not allowed to travel, man. Love you guys. Cheers. Alrighty, so that's exactly what he said. He said crowds are usually right in the middle of a cycle, because in the middle of a cycle, it's like you're just riding with the tide, but they're usually wrong at the peaks of the cycle. And that's why I say that it does feel like we are starting to bottom out and we're getting into the peak of the bottom, which is like the trough of the cycle. I don't think we're there just yet. And I'm going to show you some indicators today to show you where I think we are and why I think we are. We're going to go through all the indicators because it's, I want to paint a picture for you of exactly what I'm seeing, why I think we're getting near the bottom, but we're not exactly at the bottom yet. And then we're going to talk about that strategy, because remember, you got to have a four-pronged strategy, and we'll spend time on that four-pronged strategy the whole week, because it's very important that you maximize the four prongs. And again, just to remind you what the four prongs are is, one, you got to know what you want to buy and where you want to buy it. And I'm going to talk to you about what I'm buying and where I'm going to buy it. Then I'm going to talk to you about what I'm switching, because the market has adjusted. Solana's come down, AVAX has come down, Ethereum's come down, but not as much. You may need to switch to rebalance your portfolio to have the best chance in the upcoming bull market. Then you want to maximize the amount of money that you're making on your cash while your cash is sitting on the sidelines, because it's not like you're sitting in US dollars, which you're going to invest in Chase Bank and get 0.1% interest. Here you can get 20% interest. Now, that means that if you're waiting, I don't know, a couple of months, 2 months, 3 months, you want to be earning money on your money. And the last thing is, you want to make sure that your current portfolio is earning as much as it can. I'll give you an example. If you stake Tomb or Phantom, you can earn Phantom. Now, earning Phantom at this price is amazing. Wait until Phantom explodes. You see what I'm saying? Imagine earning 6.5% on ETH in ETH. When ETH goes up, that 6.5% grows exponentially. So you want to be focusing on all four pillars of the strategy: buying, switching, earning on your US dollars, and earning on your tokens. It's important that in this market you maximize each one of them. But first, let's look at what we're looking at to see the thesis of whether or not we are bullish or bearish, or whether or not we're reaching the bottom. We do know that people are getting saltier. We do know that people are capitulating. We've seen that. That's a great sign for us. We also know that YouTube numbers are dropping. So remember, in the bull market, there were 20,000 of you watching this live. There are only 60% of you watching this live now in the slightly cooler market. And if you look at views of other channels and good channels, so look at Elliott Trades, one of the best channels out there. Look at the numbers: 50,000, 50,000, 52,000. That's not Elliott Trades numbers. It shows that the masses have capitulated. And I mean, let's go back into like peak bull: 146,000, 124,000, 85,000. So that is another metric that's showing us that people are capitulating, and we may be nearing a bottom. We're not exactly at the bottom there. Let's look at the leverage. The leverage is another one that you want to be looking at. This is how much money people are buying crypto with that they don't actually have. And this is the dangerous leverage here. Now you can see that leverage is on the rise again, and it is very, very, very high. So that to me shows that we're not ready to capitulate quite yet. Why? Because we need one more leg down to bring the leverage down to normal levels. I've been screaming this for weeks and weeks and weeks. Then we've got the technicals. And as Birb said, there's nothing wrong in the technicals. Kyle dupes. Now guys, you got to follow Kyle. Kyle's our new producer. Let me follow him as well. It would be good if I followed you.
Thanks.
He's the new producer. He's a TA champion. He's also quite a smart guy, but he's a TA champion. And he's noticed that there is a bullish divergence when the RSI goes down and the price goes up. And he says that when this bullish divergence turns, we're going to get an explosion. And he's not the only one who's looking at the technicals. Birb showed you the technicals. We've got this JD757 who is looking at the technicals. He says we're having a textbook retest of past resistance turning into support. In other words, what he's saying is we're getting a higher low. So from a technical point of view, we haven't broken through any levels that would make people panic. You remember when the May thing happened, there was the death cross, there was the 200-day moving average, crossing the 50-day moving average, and everyone was starting to panic about the death cross and all these other things. Technically, we're still strong, and every single technical analyst is still calling this a bull market. So we're not at the point of capitulation yet. Another thing which I look at is I look at the Bitcoin dominance. It's starting to get people back into Bitcoin, as you can see over here, but it hasn't capitulated yet. Look what happened in May. It went up, it went down as people got more confidence, and then as people were capitulating, the Bitcoin dominance went up, and people put most of their money into Bitcoin, and only when they got more confidence in the market and that was in August, so let's look at what happened in August. In August, only when they put more money into the market, then we started to go up in the market, and the dominance started to drop. Now, this is not a capitulation candle. We're not capitulating it. So the dominance is not telling me that we're ready to capitulate. There is another metric, which is the stablecoin supply ratio. Now, this is a ratio. I'll read it to you what it says. The stablecoin supply ratio is the ratio between Bitcoin supply and the supply of stablecoins denominated in Bitcoin. So what it shows is how strong these stablecoins are relative to Bitcoin in the market. And what you can see is that every time the stablecoin supply ratio gets low, it shows that the stablecoins have power to buy and that they should be buying. Now here, we are at a bottom. And you can see that every time we've hit this bottom, we've gone back up. So this one shows that yes, we may have capitulated and we may have bottomed. Those are the metrics. We're looking at the technicals, we're looking at the leverage, we're looking at the Bitcoin dominance, we're looking at the fear and greed. Fear and greed is capitulated. So fear and greed capitulated. Stablecoin supply ratio capitulated. Technicals haven't capitulated. Leverage hasn't capitulated. Dominance hasn't capitulated. So we're getting towards the bottom, but we're not at the bottom yet. But we are getting towards the bottom. We are getting towards the bottom. And now it's time to actually start making that strategy, your own strategy of what you should be buying to make your portfolio whole and to maximize the upside when the market actually turns. And I'll show you a couple of things that I'm buying. It doesn't mean that you should be buying this because maybe your portfolio is slightly different to mine. Maybe you don't have enough exposure to Solana, to Ethereum, or to Bitcoin. My portfolio is underweight in a whole lot of things, and therefore I'm going to use this time to be buying these things because I believe in the narratives. And because I believe in the narrative so much, I don't really care whether there's an up candle or a down candle. I care about the narrative, and I know what the narratives are, and I'll talk to you about which narratives I think are good and whether I'm underweight or whether I'm overweight. I am a bit overweight, but I am going on a diet now. I'm starting to count my calories. I count everything that I eat now. I've got this app now on my phone, and I count everything that I eat. And actually today, I'll tell you, I've got 942 calories to eat. So I've got like half my allowance still to eat today. And it's already 3/4 today. So maybe tomorrow I'll be a little bit thinner. But anyway, jokes aside, let's look at the stuff where you're underweight on your portfolio. See, I am underweight. Helen, I'm underweight on my portfolio. And I'll show you what my strategy is to be buying it and why I'm going to be buying it. So this is the part I think you guys have all been waiting for, right? This is what everyone's like, well, should we do this tomorrow? Yeah, I'll do it. No, it's not fair. It's not fair. It's like you got on a date with a girl, and then the whole night you're talking about how you're gonna have sex, and then she takes you back to her house, and then you like there and you like ready, and she says, "Okay, cool, we do it tomorrow." You can't do shit like that. You can't do that.
Give just a tip, just one.
Yeah, we'll do just the tip. You see, that you can do. You see, the problem is, I'll tell you, the problem is that in both cases, whether you do just the tip or whether you don't do anything at all, ultimately you get sore, you get blue balls, I think they call it, right? Isn't that what they call it? Okay, so we'll do some today, but I want to try and keep these shows a little bit under an hour. Everyone here is blushing. I'm the only one in front of the camera. Look at Carl. Carl's blushing. Look at Carl. I mean, I should be the one blushing. Yeah, actually, with this shit studio technology, I actually can make myself blush. Watch this. I'll make myself blush. Are you watching? No, hold on. I'm using the wrong button. Okay, watch. Hold on. I'll show you. I'm going to make myself blush. Magic. I made myself blush. Okay, so let me show you. I'm capitulating. Okay, no, let's get serious again here. So I'll show you the things in my portfolio that I'm looking at right now. It doesn't mean that these are the good things for you to look at in your portfolio. It depends what your portfolio looks like. So one of the things that I've noticed in my portfolio that is very underweight is this layer 2 Ethereum narrative. And specifically the ZK rollups layer 2 Ethereum narrative. And we're going to do a whole show on the ZK rollups Ethereum narrative. I think we'll do it tomorrow or maybe Thursday. If not tomorrow or Thursday, it's going to have to be next year. Tomorrow. We'll have to do it tomorrow. If the narrative's good tomorrow, we'll do it. So let me show you a few of the things that I'm looking at. The first thing that I'm looking at is this Ethereum layer 2 narrative. And MATIC Polygon has been making all the right noises with the ZK rollups and talking about ZK rollups. And I don't have enough exposure to MATIC. I don't have enough exposure to the MATIC ecosystem. But right now, when I look at MATIC, and I'll show you this, MATIC to me seems a little bit expensive. Why? Because it's been running. So I'll show you this. MATIC is a little bit expensive. I do have MATIC in my portfolio, but I don't have enough MATIC in my portfolio relative to the thesis of ETH 2.0. And if you look at the MATIC chart, what you can see here is that MATIC is quite close to its all-time high. I mean, it's not that far off its all-time high. But if you want to buy the MATIC ecosystem, one of the things that I'm looking at for myself is I'm trying to buy Quickswap. And the reason why I'm trying to buy Quickswap is because if I look at MATIC and I look at the best exchange on MATIC, the best exchange on MATIC is Quickswap. Now, this token has been as high as $1,500 in its peak and even $1,000. And today, this is trading at $218. And this is effectively the biggest DEX. Did you hear what happened there? It's the biggest DEX on the MATIC ecosystem. It's the biggest DEX. I have pics. I'll show you pics. You can get pics at DeFi Llama. So this is one that I'm starting to look at buying. Another one which I'm starting to look at buying because I want exposure to Avalanche. Well, I am looking to start buying Avalanche again, but my price target for Avalanche is around $60. So my comfort point to get in, based on all the other Avalanche that I have on my portfolio, is to be buying more Avalanche at around $60. Currently, it's at $81, so it's not making any sense to me. But, don't you fuckers front run me. You can buy Trader Joe at 190. So for me, the point where I'm going to start adding Trader Joe is between 160 and 180. Between 160 and 180, I'm going to start accumulating Trader Joe. Why? Because I'm not looking at this cycle. I'm looking at the cycle, the next cycle. I'm looking at once the market turns, I know Avalanche is going to come back. I know it's going to come back with a vengeance, and I want to be there, and I've got great entry points. I can buy Avalanche, and I can buy Trader Joe. So that's another narrative which I'm looking at. Another one, I'm going to show you one more, and then tomorrow we'll have sex tomorrow. Today is just the tip. We're just going to do just the tip. Another one which I'm looking at is Metaverses. Now, there are two, in fact, Metaverse. Let's talk Metaverses. Tomorrow we're going to do the rest. Don't worry. Tomorrow we're going to do all the rest. Metaverses and gaming and NFTs. And then I look and I say, hold on a second. Superfarm was supposed to have a run. It got listed on Coinbase, but the Coinbase run was canceled because of a bad market. And now Superfarm is back at $1. Okay, now let's just go back on the history of this token. Let's go back even more. This is a token that hit $4, came all the way down, and started to climb, but then got killed in this market. We know they're launching their products and their games now, Q4 and maybe Q1. So to me, this is another one that I think I'm going to start accumulating. So what you've noticed is that I'm starting to slowly accumulate the things that I need in my portfolio, right? Well, this is not what you need in your portfolio. It's what is lacking on my portfolio relative to everything else that I have in my portfolio. And tomorrow I'll show you guys a much broader view of what I'm buying, and we'll spend a lot more time on the 4 prongs of the strategy, and that is buying the right stuff, switching from one to another because a lot of you are too nervous to switch, making sure that your stable coins are earning yield while we're waiting, and then also making sure that your tokens, your ETH, your Lunas are all earning more ETH, more Lunas, and more Phantoms while we're waiting for this proverbial bull market to continue. You got it? See you again tomorrow. Until then, I'm going to burn the studio. Tomorrow when we broadcast, we'll be broadcasting from there, and it will be, we've had the camera mess up 3 times in one stream. It's unacceptable, I think. Should I start talking about, I'll be salty and I'll tell you, I'm using this camera with this sound card. No, I won't do that. Guys, I'll see you again tomorrow. Until then, trade well, my friends. Sure, the cameras were a bit stressful 3 times in one show.
Sure, I thought I was going to have to host a show with Birb.
Shit. Got to fix that up.